A very good morning. Welcome to the financial analysis section of Financial Markets. I'm your host, Victor Chiberu. Now, we have a lot to go through as of today, and we're noticing that the figures have been in play ever since the opening of our most recent trading session. But obviously, we'd want to go first into the Uganda Securities Exchange to understand how it closed off the previous trading session and what to expect in today's trading session as it is happening right now. But from our previous trading session, we are looking at about a total of 6,883 shares, and it was all corresponding to a market value of about 1,041,500 Ugandan shillings. So compared to the previous trading session, we are looking at a 100% decline in volume, 100% decline in turnover, and all this bringing us to a market capitalization of 20.3 trillion Ugandan shillings. Now, just for context, we want to understand where the Uganda Securities Exchange is coming from, and we have come to realize that most of the Ugandans that have been gaining interest in the financial markets environment do not know or understand how this platform works, where it came from, and the pillars that have held it up until today. But the Uganda Securities Exchange was actually incorporated in 1997 as a company limited by guarantee without a share capital. So it is the principal stock exchange particularly was supposed to focus on the operation of this entity. So it is the only stock exchange in Uganda, and it was established as a result of the government's policy of transforming the country's economy from a public to that of a private sector basis. Now, the Uganda Securities Exchange actually offers an organized market where buyers and sellers of securities meet as dealers, brokers, or represent them to acquire or sell securities such as equity shares and bonds and many other options. But as an alternative source of investment capital for small and large enterprises, the Uganda Securities Exchange has actually represented a link between companies with capital needs and the general public with savings to invest. So this all together is actually allowing these investors to become part of owners of these companies. So in October of 2003, the Uganda Securities Exchange launched the All-Share Index, which is a market-weighted average index comprising of all listed stocks on the bourse. So it is actually dating back to a base value of 100 as of December 31st, 2000. And in addition, the All-Share Index on the Uganda Securities Exchange publishes the Uganda Securities Exchange Local Company Index, which tracks the performance of the domestic equities on the exchange. So in July of 2015, the Uganda Securities Exchange actually implemented an automated trading system, and it is a computerized based trading application set up to automatically buy and sell securities. So this, along with the new central securities depository system, has actually improved liquidity and trade efficiency, and this is through reducing the settlement time from 5 to 3 days. So as we're seeing the developments coming in from the Uganda Securities Exchange over the years, looking into the listed equities, we want to understand how these particular entities participated in the most recent trading session. And in aggregate, we're looking at 2 Uganda Securities Exchange listed equities that participated in the trading, and we ended with about 4 gainers and 4 losers. Centum Investments led the gainers with a 3.02% share price appreciation, and it closed with 256.11 Ugandan shillings per share. Now, for context, Centum Investments is actually a cross-listed equity, and it is also coming to our surprise that it is performing in this particular way, especially because the mother company in Nairobi is supposed to be affected by the political environment in the state as we speak. But Centum Investments is actually listed on the Uganda Securities Exchange and has been so since February of 10th 2011, and Centum is traded on the Uganda Securities Exchange under the ticker symbol SENT or CENT, and the International Securities Identification Number is also as is. When you check the Uganda Securities website, you will get more information. And we're looking at a market capitalization of 170 billion Ugandan shillings from Centum Investments alone, and the shares outstanding stand at 665 million Ugandan shillings. Now, as of the previous trading session, Centum Investments actually rose from 236.25 Ugandan shillings to 256.11 Ugandan shillings. Now, this was recording actually a 23.5% drop from the previous closing price of 308.81 Ugandan shillings. So Centum actually began the year with a share price of 205.36 Ugandan shillings and has since gained 24.7% on that price valuation. Now, this alone is actually ranking it the fifth on the Uganda Securities Exchange in terms of year-to-date performance. Now, looking at the information on this company as of today from their financial figures, we're looking at a string all the way from 2019, and there's been so many points of increase and decrease. And looking at the particular period from 2023, from July, from 7th June of 2023, we were looking at a volume of 500, and it closed at about 236.25. Now we're noticing a change of about 72.56, and in percentage would be looking at a 23.50%. Now, Centum Investments is obviously worth looking into. Their performance has been on the charts and has been so since last week. So we're yet to see more coming in from Centum Investments, as well as other cross-listed equities listed on the Uganda Securities Exchange and the Nairobi Securities Exchange. Now, to focus on other entities as of the previous trading session, we are looking at National Media Group that also came in the top gainers. Now, National Media Group actually went up by 2.72%, and it was closely followed by Jubilee Holdings with 0.21%. Now, just for context, Nation Media Group actually has been listed on the Uganda Securities Exchange since October 19th, 2010, and Nation Media Group is actually traded on the Uganda Securities Exchange under the ticker symbol NMG. Now, information on all this can be found on the Uganda Securities Exchange website, including the International Securities Identification Number and any other information an investor might be interested in. Now, in terms of outstanding shares, we're looking at 189 million, and it's bringing us to a market capitalization of 101 billion Ugandan shillings. Now, Nation Media Group has actually shown some noteworthy performance as of this week, and we're yet to see how the week goes down, because as you know, these markets are highly volatile, and you can always expect the best or the worst in just a matter of hours, and you have to wait until the market closes to make your decision. But looking into other gainers from yesterday from the Uganda Securities Exchange, we're looking at Jubilee Holdings, and Jubilee Holdings is actually another cross-listed entity. It is a Kenyan insurance company that has been in operation since 1937 in the East African region. Now, the company's operations in Uganda were revived in 1992 by the formation of Jubilee Insurance Company of Uganda, together with the Aga Khan Fund for Economic Development. So International Finance Corporation and the Development Finance Company of Uganda joined these companies later on to push the creation of Jubilee Insurance Corporation of Uganda. Now, Jubilee Insurance is one of the leading insurance companies in Uganda, and it holds a reputation of the time it has been so in existence, among other things that would be worth looking into as an investor that has their eyes on this particular company. We're looking at a market capitalization of 313 billion Ugandan shillings, which is about 1.5 0.54% of the Uganda Securities Exchange equity market. It is actually traded on the Uganda Securities Exchange under the ticker symbol JHL. And we're looking at an outstanding share amount of 59.9 million Ugandan shillings, which is quite a value as we have seen in the previous trading session. But looking into other gainers, we're looking at Kenya Airways, and Kenya Airways went up by 0.21%. Kenya Airways has been on this list of the top gainers since last week, and it is also worth noting that there must be a lot of financial information about the company that is leading to this increase. Now, let's not forget that Kenya Airways is actually performing on the Uganda Securities Exchange, but that does not mean that it is performing on the Nairobi Securities Exchange. But just for context, Kenya Airways is actually a Kenyan aviation company that was first incorporated in 1977. Now, this information might seem familiar to most of you, but there is a lot about Kenya Airways that you might not know and you need to know as an investor, so it is worth looking into. But Kenya Airways on its opening was wholly owned by the government of Kenya following the collapse of the East African Airways. Now, the company was actually privatized first in 1995 when 26% of the shares of the company were actually sold to KLM Royal Dutch Airlines, and then in 1996, involving an initial public offering of the company's shares in the biggest share offering in Kenya's history, which was oversubscribed by 82%. Kenya Airways shares have attained blue chip status on the Nairobi Stock Exchange owing to, among other factors, a high level of corporate disclosure, earnings growth, and the shares' relatively high liquidity. Now, the decision to cross-list the airline's shares on the Uganda Securities Exchange was actually made as part of the company's strategy to be a major player in Africa. Now, it has been listed on the Uganda Securities Exchange since March 28th of 2002, and Kenya Airways is traded under the ticker symbol KA. More information on the International Securities Identification Number and anything you'd want to know about how the company's performance has been tracking on the Uganda Securities Exchange can be found on their website. Utilization of 635 billion Ugandan shillings, which is about 3.12% of the Securities Exchange equity market. They're standing with an outstanding share amount of 5.68 billion Ugandan shillings, which is a remarkable value. But with that from the top gainers, we want to look into the losers as well to see how these companies performed and what could have possibly led to them coming up on the losing side. But we're starting with East African breweries, which came out last with an end-of-day price depreciation of 2.06%, closing at 4,091.09 Ugandan shillings per share. And we have seen East African breweries fight throughout the previous week and through the start of this week to regain their position among the top gainers. But we're yet to find out what is leading to the decline in share price. But the East African Breweries Limited is actually a public limited entity, and it was incorporated under the law of the Republic of Kenya. It was founded in 1922, and it is a group holding company for the largest brewing concern in East Africa, with an annual turnover of 325 million US dollars. East African Breweries Limited owns 100% shares in Kenya Breweries, Central Glass, and Kenya Maltings in Uganda, and it owns 93% of Uganda Breweries Limited and in Tanzania, and 86% of Kibo Breweries. So East African Breweries Limited has been listed on the Uganda Securities Exchange since March 27th of 2001, and East African Breweries is traded under the ticker symbol EABL. But looking into the market capitalization, it is currently the third most valuable stock on the Uganda Securities Exchange with a market capitalization of 3.24 trillion Ugandan shillings, which is about 15.9% of the entire Securities Exchange equity market. The shares outstanding are at 791 million, and the market capitalization is at 3.24 trillion Ugandan shillings. Now, other companies coming in on the losing side, we're looking at KCB Group with a share price depreciation of 1.24%. Equity Bank with a share price depreciation of 0.14%, and MTN Uganda with a share price depreciation of 0.09%. MTN Uganda and Airtel Uganda recorded trading volumes of 5,533 and 1,350 respectively. So regarding the performance of the Uganda Securities Exchange market indices, the benchmark actually shed 4.85, which is a depreciation of 0.46%, closing at points of 1,054.06. Now, this alone was representing a one-week loss of 0.6%, a four-week loss of 2.29%, but an overall year-to-date gain of 20.81%. The local company index decreased by 0.03% to close at 263.40 points, making it a one-week loss of 0.08% and a four-week loss of 0.6%, as well as a year-to-date loss of 3.11%. Now, that is it to sum up the trading summary as of the most recent trading session on the Uganda Securities Exchange. We have seen gainers, we have seen losers, and also let's note that as much as entities like Bank of Baroda have always been appearing in the summary, today Bank of Baroda has not appeared in this trading summary and hasn't even recorded a trading volume, which goes to show you that these markets are not predictable. You might be able to calculate your move, but it is worth having an open eye into these flows to understand how different activities, different events, and different news is bound to affect the performance of the listed entities. But looking into the Nairobi Securities Exchange as well, would want to understand what went down, especially for the cross-listed equities from both Uganda and Nairobi. But as of the most recent trading session, we are looking at a total of 9,825,800 shares, and that was in about 1,015 deals, corresponding to a market value of 188,295,282 Kenyan shillings, and that was what was traded. But compared with the previous trading session, we're looking at a 55% decline in volume and a 50% decline in turnover, but we're seeing a 7% improvement in deals. Now, all this is bringing us to a market capitalization of 1.77 trillion Kenyan shillings. Now, just for context, the Nairobi Securities Exchange was actually established in 1954 as the Nairobi Securities Exchange and is the leading stock exchange in East Africa. And looking at it now, it is offering a world-class level trading facilities for both its local and foreign investors looking to gain exposure to the country's rising economy. Now, the boss is based in Nairobi, and the capital of Kenya actually holds one of the fastest growing economies in the sub-Saharan Africa. Now, the Nairobi Securities Exchange operates under the jurisdiction of the Capital Markets Authority of Kenya and is governed by an 11-member board of directors. And in 2014, consequent to the successful IPO to raise 627 million Kenyan shillings, the Nairobi Securities Exchange demutualized and became listed on the main board of its own exchange. And in 2008, in order to provide investors with a comprehensive measure of the performance of the market, the NSE launched the All-Share Index, and the All-Share Index is a market capitalization weighted index which had a base value of 100 as of January of 2008, and it is comprising of all listed securities, effectively the benchmark index of the Kenyan Stock Exchange. In 2011, together with the FTSE International, the NSE actually introduced the Nairobi Securities Exchange Kenya 15 and the Kenya 25 indices, which are designed for the creation of index tracking funds and derivative products and as performance benchmarks while ensuring their investability. And the 25 share index measures the top 25 companies. Now, quickly shifting our focus to the top gainers, we're looking at 47 Nairobi Securities Exchange listed equities participating in the trading, and that is in aggregate, and we ended with 21 gainers as well as 20 losers. BK Group led the gainers with a 9.68% share price appreciation, closing at 34 Kenyan shillings per share. It was followed by Home Africa with a 6.25 share price appreciation. Britam Holdings also went up by 5.26%, and Uchumi Supermarket with 5%. On the losing side, Longhorn Publishers came out last with an end of day price depreciation of 9.09% and closing at 2.10 Kenyan shillings per share. And we're looking at Express Kenya coming right after with a share price depreciation of 8.62%. Trans-Century went down by 7.32% as well, and we're seeing Nation Media Group also underperforming on the Nairobi Securities Exchange with a 6.76% decline. Now, Safaricom recorded the highest trading volume of 3.08 million traded shares, followed by KCB Group with 1.71 million traded shares, Trans-Century with 1.53 million shares, and Kenya Reassurance Corporation with 1.4 million traded shares. And regarding the performance of the Nairobi Securities Exchange market indices, the benchmark or the all share index declined by 1.76, which is a 1.54% decrease, closing at 112.75 points. So it's representing a 1 week loss of 0.62%, a 4 week loss of 0.75%, but an overall year-to-date gain of 22.41%. Other remarkable indices that performed were the 10 share index that went down by 1.92%, and we're looking at a 1 week loss of 0.97%, but an overall year-to-date gain of 26.38%. The 20 share index also went down by 0.1, leaving a 1 week loss of 0.71%, but an overall year-to-date gain of 15.26%. 25 share index also went down by 1.25%, and it left with a 1 week loss of 0.79%, but an overall year-to-date gain of 22.88%. Now, that is the summary of the financial performance of the Nairobi Securities Exchange as of the most recent trading session. We're yet to see a lot happening, and we're yet to see many more changes in the performance of these entities as the trading session comes to a close as of today. But before we shift into more important financial news in the East African financial environment, we'll go for a short break, and we'll be right back with more highlights on more effective news affecting these companies.
My friend, just enter. Everyone now has all access to Pearl Magic Prime. Kasim, give this man some biscuits.
They're over.
They're over. But you see these people here, they are on GOTV Plus, like you. But now they can watch big shows like Sanyu, or they can watch Beloved and they cry. So my friend, from now on, it's more magic to Uganda's best shows on GOTV Plus.
Amanya gange nze Namutebi Sharon nga nkolera wano wennyini Saka Kirombe oba Makindye. Empangula gye nawanguddemu ssente mbadde nga nkozesa mobile money nga nsindika school fees w'omwana ku ssomero. Okutegeera nti mpangudde nze mutima neegambye nti kambalinde bamale okujja ndyoke nzikirize nti mpangudde. Kyenyinza okubagamba nti si byabafere weewaawo abafere gye bali naye ennamba eri emu yokka era bw'eba ekukubidde omanye eyo si yabafere. Mpulira bulungi nnyo 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 era ndi musanyufu nnyo. Naye MTN mobile money mbebaza nnyo mwebale nnyo mwebalire.
Together we're unstoppable.
Luxury redefined at Seasan Hotel as you indulge in the splendor of elegant living fit for the royalty that you are. Step into comfort, pampering and blissful customer-centric service as you select from our range of comfy exquisite living quarters furnished to meet with your royal preference. Surrounded by scenic beauty, our tropical setting allows you to escape the glamorous ordeal of city life. Our ambient green gardens will guide you to a place of revitalizing rest. The 3-star restaurant caters to your palate, serving your choice menu ranging from exotic cuisines to local delicacies. Our chefs will serve you full-course meals for a truly out-of-this-world culinary experience. Our fully stocked bar to whet your throat, from renowned global brand whisks, brandies, gins, beers and wines to our locally celebrated beverages, you will not lack for any brewage. It's an all-new experience in the East at Seasan Hotel. So visit today at plot 15 to 19 Spire Road, Ginger, or contact us on +256 751 719 960 and +256 785 354 614 for reservations. Seasan Hotels, luxury redefined.
Smart 24, driving business.
Welcome back from that short break. Now, to go straight into financial news as of today, we're looking at one of the major headlines as of today, and it is Uganda, Tanzania, and the Uganda-Tanzania fresh produce volume via Mombasa to hit the rise. But the volume of the fresh produce from Tanzania to Uganda exported using reefers through the port of Mombasa and Kenya has actually increased to 6% compared to last year. So the Mombasa port recorded about 6,813 20-foot equivalent units, and it was helped by the installation of 1,367 reefer plugging points in its port facilities since last year. Now, reefers are actually refrigerated containers, and the $380 million Business Environment and Export Enhancement Program implemented by Trademark Africa to push for radical decarbonization of value chains that deliver fresh produce is yielding fruit, with more traders preferring sea to air in transporting fresh produce. Now, customers, especially in Europe, have been on the front line in this push, and currently perishable goods approval through the Mombasa port are done at the point of loading. The permit approvals are granted by the Kentrade operated National Electronic Single Window System. Now, the Kenya Ports Authority Managing Director Captain William Ruto said the agency has actually installed 1,367 reefer plugging points and 795 at the Mombasa port, 336 at the inland container depot, which is in Nairobi, and 216 at the Lamu port, and 20 at the Naivasha port. So Kenya started transporting horticultural produce by sea in a move that would reduce the carbon footprint and improve earnings. So this is after Kenya signed a pact in the European Union, one of the major export destinations, agreeing to transport fresh produce via sea after Mombasa port complied with requirements last year, and that was according to Captain Ruto. But he added that the goal is to enhance the competitiveness and share exports of Kenyan avocado, mangoes, vegetables to Europe and other international markets. And this is through focusing on resolving production, storage, logistics, and value addition challenges that the sector is facing. So he said, in line with KPA's efforts to improve customer experience and provide trade facilitation initiatives, priority lanes are available and operational at the port of Mombasa to facilitate delivery of reefer exports, including access to port scanners. So according to his communication, he mentioned that they have been receiving fresh produce from Uganda, Tanzania, and other parts of the country, and the demand made them increase the plugging points. So in handling this fresh produce, shippers of containerized perishable produce are granted priority to land at all entry gates, and that was according to the port boss. So the use of reefers is actually ideal as temperature controlled containers equipped with refrigerated units that are plugged into an electrical source at a depot and the terminal or on board a vessel. Port established power points to maintain refrigerated facilities along the supply chain of Naivasha to Mombasa. And the advantage of using sea as a mode of transport is that traders will benefit from economies of scale, thus lowering the cost of transporting fresh produce by sea. So compared to air, it has actually been expensive for many of these traders. So to facilitate the use of the sea to transport fresh produce, KPA has upscaled the number of reefer points and also prioritized fresh produce at scanning points at different port facilities, and this is to ensure the quick track turnaround time. So Hasit Shahada, chief, has benefited them as they are now able to transport such products in bulk at lower prices. The introduction of special refrigerated containers and plugging points at point facilities has turned out to be. Cold chain logistics market was estimated to be at about $182.5 billion in 2022 and is expected to reach $343.75 billion by 2027, growing at a compounded rate of 13.5%. So Maersk Eastern Africa has actually the head of their integrated cells, the cold chain, Karen Rono, said that the shipping lines have invested in the cold chain supply, which is now attracting more traders within the region. And according to her, since the introduction of the refrigerated containers, port users from East Africa have taken advantage of Mombasa port, which installed a rocketing situation in terms of the performance of the port. And we're yet to see a lot to happen, even with the advancement of the railway that is to connect East Africa once again, and we're yet to see how that plays out in terms of the financial markets environment. Amid the increasing fiscal pressures and the debt sustainability issues in the East African governments, and the East African countries, we're looking at governments now making more use of the exchange of information agreements available to them more than ever. And last year, the amount of tax revenue raised by countries on the continent from exchange on information and requests that were increasingly steep actually went up by 71.5 million US dollars in 2022 to hit a 2.3 billion US dollars, the highest level in over 10 years, according to the Tax Transparency in Africa Report 2024. And it was published by the Africa Initiative last week. So this was a result of increased use of the EOI and the automatic exchange of information between countries in net tax cheats, stashing money and other assets in offshore accounts to evade taxes in their home countries. And in 2023, the number of exchange of information requests sent to other jurisdictions around the globe by African countries actually increased by 67% to 888, up from only 531 in 2022. So exchange of information requests are appeals by a country's foreign countries. So traditionally, African countries have utilized the avenues available for such EOI arrangements much less than others. And the requests Africa has received over the years has been significantly larger than those they sent. So this is highlighting their slow adoption of the agreements. But for instance, in 2022, countries on the continent made only 531 requests, but received 683 requests from other jurisdictions requesting information on their nationals. So 10 years ago, Africa made only 38 requests, but received 279 requests on average. This is no longer the case, and we're looking in aggregate. African countries also became net senders of EOIs, and in 2023, it was making a total of 888 EOI requests, and the highest number since the Africa and exchange of information for tax purposes in 2014 to boost Africa's ability to utilize and the EOI avenues for them to curb tax evasion and boost revenues. So at least we're looking at 19 countries utilizing the EOI avenues as of last year, and it went up by 15 in 2022, and an indication that the countries on the continent are increasingly appreciating the need for the tax transparency platforms available for them. So while the data on how much each country raised on additional revenue from EOI is not disclosed as of now, the Global Forum has previously disclosed that 4 countries, which is Kenya, Tunisia, Algeria, Nigeria, dominated the requests, made accounting for the 90% of all the requests. So the increased use of the EOI frameworks come at a time when most African countries are suffering a cash squeeze as debt servicing costs soar and grants from rich nations dwindle. So according to the Global Forum, utilizing the EOI avenues is a crucial way of boosting tax revenues in Africa and also combating illicit financial flows across the globe to end financial crimes as well as tax evasion. But the remarkable addition of revenues identified by and its potential to generate substantial resources domestically and support other domestic resource mobilizations or DRMs as the organizational report noted. But in our latest data from the International Monetary Fund, it is revealing that most African countries are actually expected to narrow their fiscal deficits this year, which will only be made possible if the tax revenues increase as their headroom for more borrowing has also grown small. So on average, the budget deficit for the continent is expected to slim to 3.7% of gross domestic product this year, from about 4.1% last year and 4.44% in 2022. At the same time, the IMF expects the continent's average debt to GDP ratio to drop from 60.1% in 2023 to about 58.5% in 2024. 2024. So this is actually an indication that most countries will be taming their appetite on or debt financing this year compared to their previous years, and these projections by the multilateral lenders appear to have put more and more countries on the continent to raise tax revenues as their sources of financing, including aid from richer countries, and this has also been on a downward trajectory in most of the countries. So looking at more on this information, we're looking in the region, the countries appearing to be overstretching their limits to raise more money from domestic revenue mobilization efforts. And Kenya, for instance, last year alone introduced a raft of new taxes that were expected to lift its ordinary revenues from 2 trillion Kenyan shillings, which is about 15.4 billion US dollars in 2023-2024, to 2.6 trillion Kenyan shillings, which is about 20 billion US dollars in the current financial year. So in the incoming financial year, Nairobi expects additional tax measures to generate at least 324 billion Kenyan shillings, which is about 2.5 billion US dollars, raising its total tax revenues to about 2.9 trillion Kenyan shillings, and would be talking about 22.3 billion US dollars. Now, in Uganda, the case is rather different. We're looking at multiple things to play, and we would rather see how this most recent output of the budget is to be perceived by most of these companies. But hopefully these measures are going to play out, and we'll see how the companies on these markets react to how these movements are going to happen. We're already noticing instability from the increase in taxes in Kenya alone, and we just have to wait on time to see how the markets respond to that as well. But in Uganda, the government has actually introduced several new tax measures for the coming 2024-2025 financial year, and it is intended to raise tax revenue by 1.9 trillion Ugandan shillings, which is about 488 million US dollars. Now, this is to fund the 58.3 trillion Ugandan shillings budget for the coming year, and other countries in the region are also exploring new ways to raise tax revenues to finance their coming year's budget, and the EOI approach seems to be gaining momentum amongst them as well. Now, that is actually what is coming in from the East African financial news, and it is worth noting that you have to keep an open eye to these headlines to understand how these equities are behaving or responding to some of these movements. But we're yet to see more happening on the East African financial market environment, and more on this is going to come in as Kenya also comes to finding a real solution to the political environment. But in global news, we're looking at another major headline, which we're looking at Elon Musk winning, who actually won his Tesla pay battle, and now he has to win his own legal war. Now, the new legal battle is underway to determine whether Elon Musk actually gets his money from Tesla and convinced shareholders to back the CEO's $56 billion pay plan. And Tesla actually filed court documents last week before the same Delaware Chancery Court judge who previously voided Musk's compensation, arguing the June 13th shareholder vote offered a principal resolution to end the dispute in Musk's favor. Now, the attorney for the shareholder who successfully sued to block the pay package argued in a separate court filing on Friday that Tesla's shareholder resolution should have no legal effect on the judge's original decision, and that Tesla is not actually empowered to use an extrajudicial vote to overrule the Delaware court. Now, this attorney, Greg Varolo, said Tesla must appeal the judge's decision to the Delaware Supreme Court if it wants to reverse it. And for Tesla, there's a lot riding on the certain path that Musk's disputed pay plan must now take through the US court system. So if the court gives Tesla what it wants, it can keep Musk's plan in place along with the $2.5 billion US accounting charge to which it took back in 2018 when shareholders first agreed to the all-stock option and the performance-based deal. So if not, we're looking at the electric vehicle maker instead being forced to hold a third vote on Musk's pay and plus a book charge of at least $25 billion that could threaten future earnings. So everything here is actually unprecedented, and that was according to Kevin Murphy, an executive compensation expert and finance professor for the University of Southern California and in the Marshall School of Business, who actually testified for Tesla in a trial over the plan. Now, the unprecedented nature of Tesla's dispute means its resolution may be uncharted. So the legal battle swings the spotlight back to the Delaware judge Kathleen McCormick, who ruled in January that Tesla's board didn't act in the best interests of Tesla and shareholders in approving the $56 billion Musk pay pact. Now, otherwise, looking into all that, we're yet to see how that goes down. Let's not forget that this Tesla scandal is happening at the same time as the US is getting ready for their major presidential debate, and all that is happening within this week. And let's not forget that all those headlines have a direct impact on the behavior of global markets everywhere. So let's have an open eye for, let's keep our eyes open for this week and understand, be ready to make changes where necessary. But that has been today's analysis from the Uganda Securities Exchange as well as the Nairobi Securities Exchange, and financial news that is very impactful on the movement of these entities. We're here to see more happening as the day goes by, and we will be ready to bring for you a full analysis of how it all went down and which direction to take as an investor by tomorrow. So I have been your host, Victor Chiveru, and see you tomorrow.